So yesterday we looked at the introduction of auditing. We looked at the genesis of auditing, when auditing started. We looked at the focus of auditing previously, which we said was mainly related to the discovery, detection, and prevention of fraud. That was the focus of auditing previously. We also looked at the various theories of auditing. So we looked at the policeman theory. We looked at the theory of inspire confidence. We also looked at the theory of credibility. Then we also looked at the agency theory. And then we ended the class by looking at the postulate, the 8 postulates of auditing. And we defined a postulate to be an assumption that is same or that is held to be truth, and it forms the foundation of anything based on which that thing stands on. So postulates are assumed to be truth of life, they are assumed to be the facts, and they are assumed to be something that is accepted as how they are. So we looked at the 8 postulates of auditing. That's where we ended the class. So from what I just said, do you have any questions? Any question, concerns, contributions? Is there any contribution? Anyone, please? Any contribution? Okay. If there are no contributions, sorry, I'm going a bit fast. Sorry. So today we'll be looking at the objective and general principles governing an audit of financial statements. So here there are some keywords we must pay attention to. The first one be objective. When someone asks you, what is your objective of doing this top-up program? Can anyone tell me what is your objective? Anyone, please? Oh, you're all muted. Okay, I think there's to gain degree certificate, Rebecca. Yes, that's correct. Okay, that's a good objective. So an objective is like what's the end game? What does the person want to achieve at the end of whatever they are doing? So what is the end game to an audit? What does the auditor seeks to achieve at the end of the audit? That's what we mean by what? An objective. And then we look at the general principles governing an audit. So audit, like any profession, is not in existence in a vacuum. It is in existence because certain principles has been established, and those principles form part of what? The foundation of the profession. So the same thing applies to auditing. There are certain principles we'll be looking at when it comes to auditing. And here our focus is on financial statement audits. Financial statement. So anything that is not financial in nature, it may not find itself in the audit report. So our focus here is on what? Financial statement. Okay. Please, if you have any question, as we go ahead, please, you draw my attention. So this is going to be our outline. We are going to look at the definition and explanation of auditing, how auditing is defined. We'll also look at what an audit involves. We looked at the objective or purpose of an audit. Why do we conduct an audit? What is the purpose? What is the objective? We'll look at it. Also look at, is there a need for audit? Everyday audit, audit, audit. Do we really need to do audit? Is there a need? We'll look at the needs for an audit. Then we'll look at the scope of an audit of financial statement. So if we are auditing a financial statement, what can we audit and what can't we audit? So that's the scope. So it's like, for example, if you are playing a football match, let's say at Accra Sports Stadium, you know that the football field, it has its own unique measurements. If you go outside the measurement, it means you cannot play the football. So it's the same thing here. When it comes to these issues, we tend to look at what entails an audit and what an audit doesn't entails. So that would be the scope of an audit. And then we'll also drill into the advantages and disadvantages of audit. Are there benefits of doing an audit? And also, what are some of the disadvantages of audits? Audit in itself, it has good aspects. It also have some aspects which is not good. So what are those advantages and disadvantages of auditing? We'll look at that. And then we'll also look at the types of audits, the various types of audits. And then we'll look at the methods of auditing, the methods of auditing. And then we'll look at the other classification of audits. How is audit classified? We'll also look at the inherent limitation of an audit. Audit in itself is not, it doesn't work in vacuum. It has some limitation, just like every profession has limitation, same as audit. Audit also has its own limitation. We'll look at those limitations. And then we look at ISA 6 and ISA 200, which is our first auditing standard we will learn. And that standard is referred to as the overall objective of the independent auditor and the conduct of an audit in accordance with ISA. Please, the meaning of ISA is International Standards on Auditing. International Standards on Auditing. And then we'll look at the responsibility of the financial statement. Who is responsible for the financial statement? Is it management? Is it the auditor? We'll look at the arguments when it comes to the responsibility of the financial statement. And then we'll also look at the acceptability of the financial reporting. And then we'll look at the statutory audit and audit opinion and audit of public sector entities. So you can see the outlines alone is not easy. This is close to like 12 to 15 mini topics in this chapter, meaning it is very, very much bulky and detailed. That's why we intended to start early, because just with this objective and general principles, you can even cover close to 15% of the slides. It entails quite a lot. Okay, before we start, let me check the chat box. Do we have any questions, concerns, contribution? Okay, let me check the chat room. Okay, they're great. Do we have any ally that regulates auditing? Yes, a very good question. I'm assuming that when you say ally, you're referring to a legislative instrument or a law that
Yes,
regulates
please.
auditing. I hope I get your question correct. They're great.
Ye- Yes, please. This Okumo.
Come again.
This Okumo.
Okay, Okumo. I hope
Yeah,
I've gotten the name correctly.
Okumo.
Okumo. Okay.
Okay.
Yes, there's a legislative instrument that guides the auditing profession, and very soon you will come across that instrument. There's a law that guides how auditing is being regulated. Off my head, the one that comes to mind is the Companies Act. Is one of the instruments that regulates auditing. And then we also have the Ghana Audit Service Act. And then we have the Internal Audit Agency Act. So these are some of the laws or legislative instruments that regulate the auditing profession. That's for the law aspect. But when it comes to the actual regulation, we have the Institute of Chartered Accountants. They are the regulator of the auditing profession in Ghana. So thank you very much. That's a very good question. It means you are following. Okay, let me ask this question. You've been hearing about auditing, auditing, auditing. What is auditing? How do you understand auditing is in your lay understanding? I want for you to understand it from your own perspective so that it makes you to appreciate the cause better. So when we say auditing or audit, what comes to your mind? How do you understand it? What are some of the things that you think that audit entails? Okay. So here we have a very nice definition for auditing. And the reason why I like this definition is that this definition has all the important ingredients that I need. So we say auditing is a process. So firstly, auditing is a process. It's not an event. It's not a one-day wonder. It is a process. What is that process? That process is carried out by an appointed qualified person or body. So what it simply means is that the auditing process is carried out by someone who must be what? Appointed. And not only that, you must be what? Qualified. So it can either be a person or an entity. So that's why we have audit firms like KPMG, PwC, Deloitte, EY, and the rest. These are what? Body corporate. So they are also like a qualified appointed person. So this qualified appointed person, what does the qualified appointed person actually do? Or what does this process actually does? So we say whereby the records and financial statements of an entity are subjected to what? Independent examination. So let's take key notes of the keywords again. Records. So when the auditor is auditing, the auditor will need what? Access to the entity what? Records. Not only that, access to the entity's what? Financial statement. So you cannot audit if you don't have access to these things. In fact, the company's code has made it mandatory for the entity to provide these resources in order for the auditor to actually carry out the audit. So this whole process, where the records and financial statements are subjected to what? Independent examination. That is to say, the person who carries out this particular audit process, that person must be what? Independent. Because the person is about to carry out an independent examination. Okay, great. And this independent examination is in a way that at the end of the day, the auditor will form an opinion. The auditor will form an opinion. So this opinion will tell us whether the financial statement shows a true and fair view. That's one. Two, whether the company has been in compliance with the relevant laws, regulations, and the rest. So, two things. The audit opinion is telling us whether the financial statement shows a true and fair view, and also whether the entity has complied with all the relevant laws. Okay, great. So these are the components. I've already explained them, but we just go through them again. So when we take process, what does the audit process entails? It entails an acceptance. The auditor doesn't just come and audit. There's a process that the client must go through in hiring the auditor. So that whole process involves acceptance, continuance, and also the conduct of an audit. Before an audit can be conducted, it means there must be what you call what? An audit plan. The auditor must also perform what you call what? Risk assessment, and then his response to what? Risks. All of this forms part of what? The audit process. So we say this qualified person, what do we mean by an appointed qualified person? So the Companies Act, okay, back to what my brother asks. So you see, this is the first legislative instrument we'll be using. The Companies Act, Act 2019, Act 992. I'm sure everybody here knows the Companies Act. Who here doesn't know the Companies Act? Please, after this class, kindly go online. Now, in this age of AI, it's even easier. You can go to ChatGTP, or you can even go to Microsoft Copilot and just type in the Companies Act 2019 Act 992. It will give you a description of the Companies Act, and it will even give you the act itself for you to download. If using the AI is a problem or you don't know how to use it, just go to Chrome, or those of you who are using iOS, iPhones, you go to Safari, right? And you just type in the Companies Act 2019. It will come in a PDF form. Please download it. We are going to use that act throughout this class. So it will be in your own interest and in your own benefit for you to download the Companies Act. Okay. What does the Companies Act say, when it comes to who is qualified to be appointed as an auditor. So when you read the Companies Act, to be specific, when you look at section 138 of the Companies Act, please take note of this section. It comes in the exams most of the time. You may be asked in the MCQs, which one of the sections talks about appointment of an auditor? It is section 138. So section 138 gives out 3 criteria in order for someone to be appointed as an auditor. It says 1, the person must be a member of the Institute of Chartered Accountants Ghana. So you must be a member of the Institute of Chartered Accountants Ghana, that's ICAG, before you can be appointed as an auditor. 2, you must be licensed by ICAG. Being a member alone is not sufficient. As a member, you must have a license that shows that you can actually practice accountancy in Ghana. And then thirdly, you must not be disqualified. You must not be disqualified. So these are the three criteria that everyone must possess before you can be appointed as an auditor. And not only that, you must have the relevant skills, experience, and integrity to carry out the audit assignment. Apart from the three things at the top, in order for you to carry out the work, you must be what? Relevant. You must have what? Relevant skills, experience, and integrity before you can be appointed as an auditor. Okay. Please, any questions so far? Okay, there's a hand up. Yes, please. Please unmute yourself.
Hello, financial Derek.
Yes, sir.
Please, I want to clarify this.
Okay.
I want you to help me clarify. Some instances whereby there are some people who have been ushered to do auditing with other firms, but you realize that they are practicing, but they are not qualified. I don't know how best you can understand that.
Okay. Okay, I hope from your question, let me try to understand your question. You are saying that there are people who are in the auditing profession
Yes.
or in the audit practice. They are doing auditing work, but they are not qualified. Is that not
Yeah.
so?
Yes. But they are
Yes.
practicing chartered accountant.
They are you saying that they are chartered accountants?
They are not chartered, but they are practicing chartered accountants.
As in they are practicing audits, like they go to entities, they go to clients and audit. Is that not so?
Let me put it this way: you made mention that before you can be an auditor, you should be a qualified chartered accountant.
Yes.
And I'm saying that we have instances whereby some people they register the ICE, so it means they are practicing chartered accountant, but they are not qualified yet. But those people, you find them in audit firm, and I was asking whether how possible it is.
Oh, yes, it is actually correct. So I now understand your question. So let me put my answer in this perspective. You see, when you go to an audit firm, and especially in the audit department, I normally like referring to them as accounting firm, not audit firms, because what they do is just not auditing. They do other things apart from auditing. So let's say you go to an audit firm or an accounting firm. In that firm, you have an audit department. The audit department is headed by a partner. Okay. We normally refer to them as the audit partner. And then below the audit partner, we have what we call what? Senior partners. Okay. Then we have the audit managers. And then we have audit staff. Or some entities will call them audit clerks or audit trainees. These people do not need necessarily to be what? Chartered accountants. These audit clerks, audit trainees, audit staff, and all of that. They can be an accountant. They can even have a master's degree. Some of them are even writing their CA papers. Okay. They don't necessarily need to be a chartered accountant before they are part of the audit team. However, the auditor here we are making reference to is the auditor that signs the audit report. Those people cannot sign the audit report. They are just part of the audit team. You see, audit is normally carried out in a team. Sometimes they are a team of 4, team of 5. And then within that team, they have a manager or a supervisor. Okay. So most of the time, the other members of the team may just be a graduate. Okay. Some of them may even be writing their CA papers. Some of them may even be a master's student. Those people, they are not the ones we are making reference to. The reference we are making here is that auditor that signs the audit report. Those people are not referred to as auditors, strictly speaking. They are audit staff, or they are audit trainees, or they are audit clerks, because they cannot sign an audit report. It's like becoming a lawyer in Ghana. Currently, yes, do you want to come in? Do you want to do a follow-up? I think someone wanted to do a follow-up. Okay. If not, let me just continue. It's like in Ghana, before you become a lawyer, there are certain procedures you must go through. So if you are just from SHS, you must go and do a 4 years LLB course. After the 4 years, you write an entrance exams to the Ghana School of Law. If you pass the entrance exams, you do 2 years at Makola, and then you write the bar exams before you become a lawyer. Come again. That's the same process that is being applied here. Before you can be called an auditor, you must be a member. When we say member, it means you should have written all the 14 papers at the CA level. You should have written them and pass. You should have been given your CA license. That's why we say what you must be licensed. You can be a member and not also licensed. There are some members who are not licensed. Okay. And not only that, you must not be disqualified. That is to say, you must not do something that must put you in that like you shouldn't do something that will bring the auditing profession into disrepute. That's what we mean by you must not be disqualified. Okay, my brother, I hope I've answered your question.
Yes, please. I'm grateful.
Okay, great. Any other question before we continue? Okay. So when we talk about the records and financial statements, we are referring to all the supporting documents, the source documents, the books of prime entry, the ledgers, the trial balance, the TB, the profit and loss account, the balance sheet, the cash flow statement. all of these are what we refer to as what? Records and financial statement. You know that in accounting, when we say financial statement, we are referring to what? The full components of the financial statement, which I'm assuming that you guys, you've done that last semester under intermediate accounting. Who was your intermediate accounting lecturer? Is it Dr. Beatrice? I'm assuming that you've done
Dr.
intermediate.
Opong. Dr.
Dr.
Opong.
Opong. Oh, okay, Dr. Opong. Okay, that's great. Clement Opong, right? Dr. Clement Opong.
Yeah.
Okay, great. I'm assuming that under intermediate accounting, you were taking through the various components of the financial statement, which includes the income statement, statement of financial position, statement of changes in equity, the cash flow statement, and then the notes to the account. All of these things is what the auditor is coming to audit to. He audits all these statements in addition to the books of prime entry, the ledgers, the trial balance, and all of that. That's why when the auditors, when they come to audit, please provide them with all the necessary and relevant information that they need. Don't be hiding information from them because they need those information in order to carry out their audit work. So some of you, when the auditors come to audit, you'll be hiding information. It's not the best. You have to stop doing that. And then we say this exercise is an independent examination. It is independent because the auditor is not supposed to be influenced by the client. Or to put it in another form, the client is not supposed to influence the auditor. That is why yesterday someone asked a question that, what about when the client decides to give the auditor money, like things for transportation, whether it is allowed? And I made it clear that those things, they are not allowed. And if you guys are in the business of doing that, when the auditors come to audit, stop. What you can give them is water, and if you have lunch, it's fine. But giving them TNT, fuel money, fuel coupons, all those things, it is very unethical. Very, very unethical. So the auditor has to be what? Independent in mind and also in appearance. And the reason why he needs to be independent is that at the end of the audit, his report is supposed to be what? Objective. So that when anybody picks up the report, they can say, yes, this report is one that has been carried out because the person who did the work, the person was what? Independent. Okay, there's a question here from Helena. Helena says, so please, how do they audit? Helena, can you come again with the question? When you say how do they audit, I want for you to like um give better particulars. Ah, okay, what do they look for? You mean when the auditors are auditing, what do they look for? Oh, they are only there to express an opinion on the financial statement, whether it shows a true and fair view. They are not there to like detect fraud and those things. Remember, yesterday we said that's not the aim, that's not the focus of audit. So the auditor focus is to examine the financial statement, and based on that, he gives his opinion. Helena, I hope you are okay. Okay, great, great. Thank you. So we've been talking about opinion. What do we mean by opinion when it comes to the financial statement? We say the opinion is the expression of the auditor's professional viewpoint about the financial statement after exercising his judgment based on the audit evidence gathered. So the auditor doesn't just give an audit opinion like that too. Before he or she arrives at his audit opinion, there's something in auditing we call audit evidence. And audit evidence is all information, both in paper and electronic form, that the auditor uses in order to express his opinion. So, the audit evidence are the things that the auditor will gather in the process of auditing. It's not just gathering these things, so after gathering all this evidence, he must now apply or exercise what we call what? His professional judgment before he can arrive at an opinion. So it's like, for example, a police officer is investigating a theft case. The police officer cannot just arrive at the scene and say that, oh, this person is the thief. No, he must carry out certain procedures, ask certain questions, and based on the answers he gets from the questions that were asked, and based on the evidence he was able to gather, it will be based on that he will be able to what? Express his opinion. So the same thing applies to audit. So based on the evidence the auditor will gather, it is based on those evidence he will what? Express his opinion. Okay, great. Yeah, Peter, I think I saw your hand up. Do you want to make a contribution? Peter. Okay, that's fine. So what is this opinion? We are saying that this opinion is about whether the financial statement shows a true and fair view and whether the entity has been in compliance with the relevant laws and regulation. So that's what the opinion is about. So the auditor is coming to tell us whether the financial statement in itself shows a true and fair view and whether the entity has complied with the relevant laws and regulation. So what do we mean by true and fair? Okay, let me take there's another hand up. Let me take the question before we continue. Yes, please. 4545. I wish you were using your actual name.
Uh, please, my question is, do auditors make mistakes in the course of their duties?
Okay, great question. But 4545, I want to know your actual name.
My name is Paul.
Paul. Okay,
Yes.
great. Okay. So yes, auditors make mistakes. Remember, auditors are human beings like us. So sometimes they make mistakes. It is true. One of the topics we'll be looking at, it has to do with audit risks. And our audit risks, we have three kinds of audit risks. We have inherent risks, we have detection risks, and we have control risks. The auditor has, I don't want to use the word control, but the auditor has authority over detection risks. That is the only risks that the auditor has control over. The inherent risks and the control risks, he doesn't have control over them. Therefore, since there's a likelihood that the auditor can give a wrong audit opinion, the auditor must be guided in the process of auditing in order to reduce or minimize the risks. So yes, it is true. Auditors can make mistakes, and they do make mistakes sometimes. And remember, when we come across the inherent limitation of an audit, the auditor doesn't audit everything. They don't do 100% check. What they do is what we call what? Sampling. So they will do sample, and based on that sample, they will what? They will express an opinion. So the auditor doesn't do 100% check. So there's a possibility that some of the items that are not part of the samples could be misstated. It is true. So please, sometimes the auditors make mistakes. It is true, but as an auditor, you must guide yourself against making mistakes. It's not because they say that sometimes they make mistakes, it means you should do the work like shabby. No. If you do the work shabby, and there's evidence to show that you were not diligent in the audit assignment you carry out, you can be sued. There's a topic called criminal liability of an auditor. You might either do it first semester or second semester. No, I think it's in first semester, yes. If the auditor gives an opinion that is inappropriate because the auditor failed to be diligent in his assignment, he can be sued for what? Negligence. He can be sued for negligence. So yes, sometimes they make mistakes. Let me check this one and then we'll continue. Okay, Peter said particularly the working papers. Yes, that's correct. Sometimes the auditor is also audited. Yes, when they are done with their work, normally they give it to the partners for them to also go through it to be sure that they've done the right thing. And even ICAG also audits these audit firms. So it's not like they are also not audited. They are also audited highly. So when we say true and fair, what do we mean by true and fair? True and fair means the financial statement is free from material misstatement. Please, in auditing, there are certain terminologies that we must abreast ourselves with. Material misstatement. It means the misstatement is of significant value or it is of significant nature. That's material. When something is material, it is significant. So we are saying that when the auditor says that the financial statement shows a true and fair view, the auditor is communicating that that financial statement is free from material misstatement. That's one. Two, he's also saying that proper books of accounts have been kept. So the entity has kept proper books of accounts when he says the financial statement shows a true and fair view. Also, the financial statement the financial statements are consistent with the underlying records. And also the financial statements were prepared in accordance with the acceptable accounting standards. That's the ISS. Sorry, the IASS, International Accounting Standards, and the IFRSs. And not only that, the relevant legislation. So for example, in Ghana, every company in Ghana must comply with the company's code. So when you are preparing your financial statement, the company code has clearly identified how an entity must prepare its financial statement. So the auditor will also be looking at those things. So that's why sometimes people refer to the auditors like, hey, are they lawyers? Because he's not just looking at issues related to financial. He's looking at the internal processes. He's looking at the laws. He's looking at the regulations. He's looking at all of these things before he can form his opinion. And also true and fair refers to asset and liability shows exist. When you put an asset in your financial position, when the auditor comes to audit, it means you should be able to verify that those assets exist. And not only that, those assets, they've been properly valued and those assets are related to the entity. So all of these things are checked before the auditor can see the financial statement shows a true and fair view. So when we say truth, what do we mean by truth? We say truth refers to factual and it confirms to reality with no material errors. It is not false. So when you say something is true, it means the thing exists. It is factual. We can see it. So when we say fair, fair refers to information that is free from discrimination and bias. So one of the elements of one of the elements of a financial information is that that financial information must be free of what? Bias. So don't put your personal interests or your personal biases shouldn't influence the information you are giving out. So fairness means that information is free from discrimination, is free from bias, and it conforms to the required standards. That's fairness. So in an exams, if you are asked to explain true and fair, I'm sure with this explanation I just gave, you should be able to write something. Okay. So compliance with laws. Which laws are we talking about? So my brother who asked the question whether there's an LI. So this is our first LI. The Companies Act 2019 Act 992. So the financial statement that the entity has prepared, those financial statements, they must comply with the Act 992, because Act 992 has prescribes how the financial statement in itself should even be what? Should be presented. Okay. And not only that, IFRS, International Financial Reporting Standards, has the entity applied the relevant international financial reporting standards? All of these issues must be what? Looked at. And then the IPSAPs. I'm sure most of you've not heard about IPSAPs yet, but you'll be doing IPSAPs this level 400 when you get to public sector accounting. Dr. Agana will be teaching you IPSAPs. They are referred to as International Public Sector Accounting Standards. So these are the standards in the public sector. And IFRSs are the standard in the commercial sector. And then if the entity is a bank or a financial institution or an insurance company, normally there are certain acts that are specific to those industries. So the financial statement must also be in compliance with those relevant acts and pieces of legislations. Please, any question at this point? Please, any question? Do someone want to add something? Contribution? Okay. If there are no questions, now I'm assuming that we all.
Hello.
Yes, please.
Thank you very much for all the lectures. I want to find out that so during examination, can they also frame the question in a form of case studies per all that we have learned?
Okay. But why are you worried about examination?
Oh, they are all important. Even though the understanding is needed, but they are all important.
Okay. So this is what I normally tell my students. By the grace of God, this will be my 4th year teaching auditing at this level. What I always tell my students is that exams, is the last thing you should think about. And why am I saying that? As for the exams there, it will come. There's nothing you can do about it. But your understanding before the exams is what is very important. And courses like auditing, if you really understand the concept, it is a paper that you can easily get an A in. That's the truth. So let me come back to your question. In an exams, what in case it is framed in a case study? Well, I don't know how your lecturer intends to write the question. But what I know is that mostly your exams will be MCQs and maybe written. I've not seen a case study before, but that doesn't mean there isn't a possibility for there to be a case study. There's a possibility. So what mostly you'll be asked is things that are in the slides. Okay. In the form of what? MCQs and maybe written. I'm sure by now you understand here in university how the structure of the exams look like and all of that. Okay, I hope I've answered your question. Okay, there's a hand up. 4545, Paul, right?
Yes. Please, my question is, after auditors have prepared their reports to
You're
the
a bit
particular,
far. Can you
I'm
mature your voice?
okay. I'm asking that my question is, after auditors have presented their reports to the company that they are doing the audit for, and let's say the company also have shareholders that they present the audit reports at their annual general meeting, and in case a shareholder is a knowledge like knows what the accountant is truly telling them, and the shareholder finds a mistake in the audit report, can the shareholder raise alarm or can even just point out to the management or the board of the company that there's a mistake in the audit report?
Okay, good question. You see, before the auditor even, I don't want to rush this, but before the auditor even writes the audit report, he doesn't just write the audit report like that too. It goes through series of review. Okay. So I'm sure by the time it gets to that point, if there were any errors or those things, it would have been rectified. But that doesn't mean that it's not possible. It is possible. So in that case, that the financial statement has been published, the entities in itself, its financial statement has been published. And then later, a shareholder notice errors. So once they come across those errors, they are supposed to alert the auditors on it. So that those errors can be what? Rectified. I hope I've answered your question.
Yes, please. Yes.
Okay, great. So let's continue. Uh, Oh, sorry. So what an audit involves? So we say an audit involves performing procedures to obtain audit evidence about the amount and disclosures in the financial statement, assessing the appropriateness of accounting policies used, assessing the reasonableness of accounting estimates, assessing the overall presentation. Oh, sorry. Just a minute, my slides are running a bit fast. Okay. So whenever we talk about audits, the first thing you should know is that the auditor perform procedures. And the procedures, at the end of the day, he's gathering what we call what? Audit evidence. He's gathering evidence. It is based on those evidence he will what? Express his opinion. But not only that, the auditor also assess the accounting policies the entity is using. Are those accounting policies appropriate? Let's say, for example, PP, the auditor is using straight line, and then another person says no, he wants to use this, and this, and this. So the auditor assess those accounting policies that the client used. And then also, he assess the accounting estimates that the clients also use in the financial statement. For example, provision for doubtful debt or provision for bad debt is an estimate. Is an estimate. So that's estimate. The auditor must assess it to see whether it is what? Appropriate or not. So those accounting estimates in terms of depreciation, provision for bad debts, and all of that, those accounting estimates are normally assessed by the auditor to see whether they were appropriate or whether they are reasonable. And then the auditor will also look at the presentation of the financial statement. Has the financial statement been presented in the correct format? You will assess all of those things. Oh, I don't know why. Oh, sorry. Okay. So any question on what an audit involves? Let's now move to the purpose of an external audit engagement. What is the purpose of an audit engagement? We've been talking about audit. What's the purpose? Like, what does the auditor seeks to achieve? What is his objective of carrying out the audits? Who can tell us what's the auditor's objective? What's his purpose? Anyone? Oh, it's actually in the slide. So the purpose is to express an opinion on the financial statement. So all the work the auditor is doing, at the end of the day, he's coming to just express an opinion. That's why yesterday when we started, I told you that when I pick an auditor financial statement, I'm only interested in one line. And that one line is what the auditor express. So the whole essence or the whole purpose is for the auditor to express an independent opinion on the financial statement of the client. So this one also talks about the objective where the auditor express an opinion. So it's just like the same thing. So when we take a critical look of the objective, there are certain things that the objective talks about. It talks about the purpose of the audit, and that purpose of the audit, why people do audit, is normally to enhance. So the whole essence is for the auditor to express an opinion. Okay. So the whole purpose is for the auditor to express an opinion. Okay. So let's take some few questions before we bring the class to an end. Let's take like 3 questions. Yes, anyone, please.
Hello, sir.
Yes, please.
Please, I want to find out why is it that auditors always base their uh, observation on evidence. Sometimes when they audit a firm per their report, you will see in it evidence, per the evidence. So I want to find out why is that they based on evidence.
Okay. Can you come again with the question?
I'm saying that why is that auditors normally base their observation on evidence?
Oh, okay. Why do they always base their observation based on evidence? Yes, evidence is everything. Evidence is key to the game. If you don't have evidence, you cannot be saying things. Okay. So the auditor express his opinion, and that opinion is what he puts in the financial statement of his audited financial statement. Sorry. I hope I've answered your question. Okay, great. Any other question? Contribution, suggestion, any other question? Okay. If there are no questions, since tomorrow is Wednesday, and I'm assuming that most of you have to go to work, I don't want to like take so much of your time. We'll bring the class to an end here, and then we'll continue tomorrow. I gave an assignment. Has my administrator posted the assignment? Okay, don't worry. The assignment will be in very soon.
Derek,
Yes, please.
please, I want to find out how many times can auditor take audit FM? And
Okay,
number
when you
of
say how many times, like,
or the period.
oh, okay. I stand to be corrected, but I think it's between 5 to 7 years. That's how consistently you can audit one firm. After which you have to like, we call it the cooling period. You have to not audit that firm for, I think, for a period of, I think, 4 or 5 years. And then you can come back again if you want to, or if the client wants you to. Do you get it?
Okay. And secondly, I realized that when you pick a particular firm, you realize different types of auditors comes around. Some from GRA, some from other places, and I don't know. So why is this so? We cannot have one auditor for a particular firm to audit a particular company or institution.
Oh, yes, you shouldn't even have a particular auditor to do that. It will, the reason being is that there's this saying that says what? Familiarity breeds what? Content. When you are too familiar with someone, you tend to not take the person serious. Is that not true?
Yeah.
Exactly. So we don't want you to be so familiar with the auditor. But you know that we have different kinds of audits. So the GRA audit you talk about, that could be a tax audit. It's different from the audit we are talking about here. In this our class, our audit is on what? Financial statement audit or external audit. We are not discussing tax audit. So obviously, the tax auditors will be different from the external auditors. The external auditors may also be, not may, but will obviously be different from the internal auditors. So for every specific tax, there must be an auditor. You cannot use the same auditor throughout. No. In that case, independence will be what? Independence will be compromised. And we don't want to compromise independence. So even if it is the same firm that is auditing you 3, 4 years, for every assignment that comes, they will change some of the members of the team. It's because we don't want for them to be what? Influenced by the client. I hope I've answered your question.
Yes, please.
Okay, great. Any other question? Okay, if there are no other questions, then
Good evening, Derek.
yes, good evening, sir.
How are you?
I'm fine, thank you. Is this Peter?
Yes, Chairman.
Yes, Peter.
This one, it's it's a personal view I want from your side since you've been in the audit
Okay.
profession for a while. When it comes to audit sampling, the sampling techniques that auditors use, auditor cannot audit every single transaction in the books.
Mm-hmm.
So do you believe that the notion that auditors should apply sampling techniques is enough for them to detect fraud?
They should apply what? Sampling techniques.
Yes, auditors apply sampling techniques when they audit
Yes.
firms.
Yes. There are
Yes,
different
I'm saying
kinds.
that
Mm-hmm. Mm-hmm.
I'm
Yeah,
saying
please
that in
continue.
your
Mm-hmm.
view, do you think that uh, auditors applying sampling techniques is enough for them to detect if there's any material misstatements?
No. The mere application of sampling techniques is not enough to detect material misstatement. No. You see, the auditor can gather evidence in three different ways. He can gather evidence from the entity itself, that's from the client. He can also gather evidence by himself, and he can gather evidence from third parties. Okay, so let me give you a scenario. The entity has prepared their financial statement, and in their financial statement, they says that their closing cash balance, as in cash at bank, was 100,000. That's what they've recorded in their books. If the auditor wants to confirm whether this 100,000 is accurate, where do you think he can get that evidence from? The client's bank, right? So that will be what? The third party. Even with the sampling, no, it's not everything that we do sampling, no. Some things we don't sample them. And even with the sampling, we have different techniques of sampling. In fact, it is a lazy auditor that will just rely on the sampling. When you sample and you get the client comes and bring support for the samples that you selected, you don't just rest there. You go ahead to question the sampling. You check the validity of the evidence that the client has given you, whether the sample in itself can be relied on or not. You don't just conclude that, oh, fine, I've done my sampling techniques. These are the samples I've selected. The client has given me all the information I want. That's it. End of case. No. There are several procedures the auditor performs. He can perform verification. He can do recalculation. He can do reperformance. These are all auditing procedure techniques he can use in order to arrive at a conclusion. And there are certain items in the financial statement. By their nature, the auditor is not supposed to do sampling. For example, if I want to um, do a cash count, I cannot sample cash count. I must physically do it. Do you get it? So
Yeah.
it depends on the specific item that he's auditing. So the auditor doesn't just, and he should never just conclude on the sample and then just draw his opinion there. No, he must perform what we call alternative audit procedures, even after gathering the evidence from the sample to see whether he will arrive at the same conclusion. But if you are a lazy auditor, if the
Okay,
client
and
give him
again,
anything, he will go ahead with it. Yes. I think you wanted to do a follow-up, Peter.
Okay. Uh, uh,
Oh, your line is breaking. Can you
you
adjust
know,
yourself a bit?
yes, yes. Uh, can you hear me now?
Yes, I can hear you now.
Can you hear me?
Yes, please, I can hear
As
you.
an auditor, uh, uh, you know, if you pick a financial statement of a company, sometimes the huge figures are the ones that
Oh, my friend Peter, we've lost him. Oh, we've lost him. Mr. Aponsa, I can see that your hand was up. Please, are you asking the question? Okay, Peter, I think you are back.
yeah, sorry, my
Yes.
line went.
Yeah. So you can take the question
With
again.
with regards to what I asked earlier, it's
Mm-hmm.
as an auditor, you cannot actually audit every single transaction. So
Correct.
sometimes, in order for the work to be fast, you pick the transactions with maybe high figures. Maybe you set a parameter or a range that, oh, items that are above maybe 1,000 cedis, I am going to audit that. And then you leave out those ones that are maybe transactions that are 10 CD, 20 CD, 50 CD, 100 CDs. You tend to overlook them because of time constraint, you know. But so those are the sampling techniques or the range that I'm trying to refer to. I've read the Wisconsin article on why didn't our auditors find the fraud. The one on your slide now, on your screen, the last point.
Mm-hmm.
Yes, I've read
Yes.
the article, and it was discovered that the lady created dollar accounts doing transaction for just a little dollar. So over the years, when you add all those $10, $10, you are going to get about $500,000 in a year that the lady was able to what steal. But assuming that the lady was able to made away with this 100 of an auditor easily. I don't know if you get me.
Mm-hmm.
But since
Mm-hmm.
the money was so insignificant, auditors have been overlooked this amount over so many years until it took just one day for one
Mm-hmm.
auditor to trace back all these accounts. So when it comes to sampling techniques, that is why I'm asking, in an honest view of an auditor, do you think that sampling techniques actually helps?
Yes, it helps, but it shouldn't be relied on totally. Because just like what you said, remember, there are inherent limitation of an audit. Looking
Yeah.
at the complexity of the entity and how financial statements are, it is practically impossible for the auditor to audit everything. Therefore, he has to use sample. But even in that process of using sample, he must apply what we call professional judgment and professional skepticism in the work he's doing, so that at the end of the day, when he's expressing his opinion, even though the opinion will be based on the sample that he used, that opinion can be relied on. Because if we say we should throw away sample and the auditor should audit everything, I'm not sure the auditor can finish the audit work in that specified time. And also remember the cost. I'm not sure entities will be able to pay the audit fee because the auditor will
Mm,
have to charge them. Do you get it?
yeah.
So At the end of the day, we must find what a fine balance between the two. But my point is that even though you are using Suppl as an auditor, don't be a lazy auditor. Don't just be a lazy auditor. Like, try to ensure that the sample you selected, you are getting your evidence from those samples. And nowadays, because of AI and the rest, and now we have lots of sampling techniques in the sense that tools, I should say. We have lots of sampling tools that the auditors now use. When they use those sampling tools, interestingly, they are able to detect the transactions that have issues with them. I don't know how they do it, but these new auditing tools that they use now for their sample, those auditing tools can give them a clue of which transactions are probable to have what? Some misstatements or the otherwise. So now I can say that we've improved a lot. We've improved a lot. I hope that's answered your question. But personally, I think
Well,
we
very
can't
well.
get away with sample. As for the sampling there, that's the way to go.
Yeah, we can't get away, but there are some limitations also there.
Yes, there are limitations in
Because
sampling because
in
you
this
cannot
case,
sample
this is a
everything.
smart way to do. Yeah.
So that in order to deal with that issue, for me, I'm of the opinion that that's why we have internal auditors. Internal auditors, do you know that the job of the internal auditors, they're actually there to detect fraud and errors?
Uh, Senior Derek, you agree with me? Ghana here internal auditors. Abi, you know.
So you see that's the problem we have now because we've not
You
been
know now.
able to strengthen the internal audit department. You see, let me say this, I think it's more of a mentality problem because the company that I now work with, do you know that we are even more scared of our internal auditors than the external auditors?
It
Yes,
depends. The relationship the internal auditors have with other members
because
of the company. Some are
where our internal auditors come from? They are
uh,
not with us. So our internal auditors, they
okay.
come from China and India. They come and
Wow.
audit for like a month and go. So you don't even know them. They are not your friends.
Uh-huh.
Do you
That is
get
why.
it?
Yeah.
So I think the issue is we've deliberately killed the internal audit department. If the internal audit department, they are actually working and we give them a free hand to work, we don't manipulate them. Most of this fraud and things, they are able to detect it because they are the ones in the entity. They see the day-to-day transaction. And another thing again we can do is pre-audit. We don't do a lot of pre-audits. So a lot of things go undetected. So don't worry, there's a whole topic on internal audit. It's
But
actually one of my favorite topics,
we do post audit too.
which is wrong. We are supposed to do pre-audit first. Pre-audits normally would detect whether there is fraud or error before the thing even happened. It's meant to prevent these things. Post-audit, the thing has happened already. Do you get it? So you see, people go to the public accounts committee. This person has done this, this, and this, and this. The thing has happened already. But
But what
what can we do to stop it from happening? It's pre-audit.
financial Derek?
Yes, sir.
This our country. You see, some of the things they will base on it will base on agency of the what is on the ground. That
Mm-hmm.
will call for them to process it. earlier on before sending it to audit for auditing.
Mm-hmm.
So that is the reason why sometimes it's called for post audit. It's not intention. It's not intention, but it do happen.
As in you not asking for pre-audit. The reason why you're not asking for pre-audit, you say is why.
It's because of the agency of the this is the
So you
uh,
see, it is the urgency of the thing that normally leads to the fraud. Why must everything be like an emergency? It shouldn't be. It's because we are making everything to be like an emergency. Charlie, this thing, and this thing we have to buy from the supplier is urgent. Those things that are always urgent, they are very fishy. Do you get it? Most of the time. So why can't we just follow the process? Sole sourcing and these things. If you go deep into those kind of contracts, that's where the fraud normally happen. So everything shouldn't be urgent. We should follow due process. Even if it will cause for the thing to delay a bit, but it will save the country millions of cedis. But because someone wants it to be done fast, in the process of doing it fast, they will have to cut corners. That's what happened. And now these days they have new ways. Oh God. The accountants, they are very smart these days now. They have new ways of committing fraud that even you, the auditor, if you are not smart, you will not even detect it.
You will never see. It's a serious issue.
Yes. So, and this goes to all of us. We are all in the same profession. Auditors, they are also accountants. So if our brother's accountant, we are claiming that. You see, always, I don't like making that statement because it's not a fair statement. It's not every accountant that is doing things
It's
like that. They are a very genuine accountant and the rest. In fact, as an accountant, you're supposed to be guided by your fundamental ethical principle. It applies to not just auditors, but even accountants. So sometimes it's not a fair comment. And sometimes these things are not the accountants who are doing it too. It is management. Do you get it? But the accountant is also scared for his job. So if the manager say, let's do this, if you don't do it, you'll be sacked. So sometimes they compromise some of these accountants.
yeah,
But
it's the same way with the internal auditors. They are also
but
scared of their work.
if it is me, you will not have your free way. So you see, sometimes it depends on how our mentality and how we are brought up culturally and the rest. Do you get it? Do you know
Yeah,
that if mm-hmm,
the
yes, make your point.
auditing standard itself it needs to be reviewed.
The auditing standard. What's wrong with the standards?
There are a lot of conditions in there that for instance, if you are a private company,
Mm-hmm.
you can you can you can appoint an internal auditor for a duration of, I think, 10 years.
I think it's 7 years.
7 years. Okay,
yeah
I was thinking that is
seven.
for the public sector. Okay, then public sector will be for 10 years. It's either of the two. One is
Mm-hmm.
10, one is 7. So you just imagine an internal auditor being with the same company for 7 years. You can just imagine the rapport, the relationship that internal auditor manager is going to create with the management body, the workers
Mm-hmm.
itself. You know,
Mm-hmm.
so that's condition or that clause in the standard need to be reviewed. Why not private companies do rotation of their internal auditors?
That's a very good suggestion. That the auditors must be
Yeah,
appointed every year. Is
yes.
that not true?
Or maybe do rotation. My internal auditor can come to your company. We'll just swap.
So what they do is that in practice, what they do is that even though, let's say, KPMG is the one auditing you, what they do is that every year they change the team that comes to audits. Do you get it? They don't bring the same
Mm.
team members every year. They come with different team members. Maybe they will leave one person on the team. Then if they are four, they will leave one person and bring three new people. The reason they are doing that is to deal with the familiarity issue that you spoke about. That one also helps. But I think your argument is very valid. That I'm even thinking every year there should be a new audit appointment. You should change the firms every year. It will make the auditors to even sit up. But there's also an argument against that. The argument against that is that when you change the auditors every year, the new auditors or the new auditing firm, they now have to now come and learn your processes. So they
No,
may
I
not
don't
be
agree.
able to detect, but if they were there last year, they
Yeah.
know the issues, those key audit issues last year.
And the
When they are
reports are
coming
even
this
there
year,
already.
exactly, they already have their working papers. Okay. They are already brief about, hey, this company last year, these were some of the key audit matters. So when they are coming the next year, even though it will be different sets of people, they know where to what put most of their efforts. Do you get it? But even with that one, there's still an argument against even that point that it is not the same people who are coming to audit. So you can't even make that point again. If you were audited last year, there were key audit matters that were raised. There's an audit report. So even if a new set of auditors come, they just need to study that report. And they will also apply effort to those same areas. So you see, the argument is both ways. Hmm? The argument is both ways. But it is a very serious issue that we don't pay key attention to auditing, especially in the public sector. And it's making the country to lose billions of cedis. If you listen to the Auditor General reports, those monies we've lost, those
The
monies that were
park.
misappropriated, it can build like so many schools and hospitals.
Financial director,
It's
Yes, sir.
serious. Oh.
are
If
there, if external auditors want to conduct
you just
audit
listen to the
exercise,
public account committee, Derek, you'll be sad.
Oh, I listen to them every day and I'm sad.
I'm saying that
Mm-hmm.
before the external auditors comes to a firm to conduct the audit exercise, I don't know, is the internal auditors uh, observation per their report, is it their major focus whereby they can get access to do their exercise?
Okay, good question. There's a standard in auditing, I think it's ISO 610. It talks about reliance on internal audits. Okay, or using the work of an internal auditor. So when the external auditor comes, he uses the work of the internal auditor, but is not in every area because you cannot rely on the work of the internal auditor because of the issues we just discussed. Some of the internal auditors, they are compromised by management. So if you are an external auditor and you relied on the work of the internal auditor, you are putting your whole auditing work at risk. So do you get it? Because these people, we say most of the time they are controlled by management. So as the external auditor, you cannot rely on them. You can take their observations, go through it. It will help your audit work. However, if you have a very strong internal audit department that is very independent, then the auditor can place reliance on those observations from the internal audit. However, the observation from the internal audit guides the external auditor's work, but he doesn't use it thoroughly, like he doesn't use it only. He also has his own procedures he's coming to do. Because internal auditors there, we've all agreed that we cannot rely on them, which is very sad. I think they should rather be the people that, like internal auditors, the entities, the staff should be scared of the internal auditors. That's what me I think. But they are not scared of them. In fact, they eat together, joke together, drink water together. So, Charlie, if you are the internal auditor, they can even play with you. Some of the internal auditors, the accountants even give them lifts. How can the person be
Oh, they
independent?
have girlfriends.
Exactly.
Hey,
Some of them, they are even in the same office. How can you be in the same office as the accountant?
you are one. Oh.
You not be independent. So these are some of the issues. So we have a lot to cover and a lot to discuss. I'm liking how the conversation is going. So I'm happy that you guys are bringing up suggestions and this one. Who knows, after this year, we can even write a memo to Parliament asking for changes to the Internal Audits Act. It's possible.
Yeah, that's true. When we get to the top, we change the whole law.
Unfortunately, it's not internal audit or audits is not my thesis, like it's not my research area. If not, I would have done a memo, but it's not late yet. We can still do a memo.
Just write it as just an article, maybe on Scholar, you know.
Yes, as a concerned citizen.
Yeah.
Okay, friends, thank you very much. I think you have management accounting tomorrow.
Mm,
So we'll meet on the other side. Have a good
thanks.
night. You're
Thanks
welcome.
for your time.
Thank
Okay,
you for the
bye.
knowledge. Right.